is Aig-Imoukhuede. I am the Group Managing Director for Coronation MB Group. And in our group, we have the bank and the asset management, the stock brokerage, and the trust station.
My name is Aig-Imoukhuede. I'm Head of Research for Coronation Merchant Bank.
My name is Aig-Imoukhuede. I head capital markets of the group.
We've been in operation in the financial service sector for close to 26 years now. We started operation in 1993, but as a discount house. That means we understand this market. We've gone through different cycle of the economy. And because we survived that sector, we've known that you have to operate in a very conservative way. And you have to follow the kind of things you preach. As a merchant bank, when we became a merchant bank 4 years ago, we decided that our risk appetite is going to be medium, meaning that we're going to select the kind of clients that we deal with. And once you focus on the kind of strategy you're operating and you stick by it, you are likely to survive and reduce the kind of loan provision and non-performing loans that you have. As a bank, we decided to focus in the area of trade finance, which is relatively safe, but also a lot of a high portion of it is what Nigeria actually does. So as a trade finance bank, we focus mainly on people that are importing and exporting, and that means we have a cycle of 90 to 180 days cleanup. Also in determining the kind of clients that we deal with, we've selected companies that we call Coronation 200. These are the top end of each sector of the economy where we decided to operate in. And when you focus on the top end of the economy, you are likely to have very low level of non-performing risk. And that's the way we've been able to keep our NPL at 0 for the 4 years. So as you start operation as a merchant bank, you have very low loan base, meaning that your provision, capital provision for loan and risky assets will be very low. But as you grow your loan book and other risk assets, your capital adequacy ratio will reduce. So at the early stage, when our loan book was very, very low, we had capital adequacy ratio in the range of about 30%. Now, as you grow the loan book, we're now in the range of about 20%, which is still higher than the regulatory requirement of 10% and our internal benchmark of 1%.
So the economy is growing a little bit faster than most people predicted. The Q4 growth was Q4 2018 growth was 2.38%, but within that non-oil growth, which is the key one, was 2.7% growth year on year in Q4. Now, if you look at the sectors that are growing, agriculture is still growing. That's 25% of the economy. Telcos are growing at something like 15% year on year. In fact, the Q4 data was 16.7% year on year. And telecoms are growing because there are more services, telco-related services in financial services, for example, and in banking and in switching. So that's a great sector. It's growing very, very fast. Trade is making a recovery. It's been growing for 2 sectors now. That's the second largest sector of the economy. And manufacturing has been out of recession for 5 quarters now. So that's growing, but slowly. It's growing at about 2%. So going forward into 2019, we see more growth from agric, sustained high growth from telcos, some growth from manufacturing, and we think trade will sustain some level of growth this year. The IMF forecast for growth in 2019 is 2%. That looks a bit conservative to us. We're at 2.25%, and I think the risks are to the upside.
in terms of do we hedge FX, if you look at the way foreign exchange transactions are done in Nigeria, unless you are taking an exposure, there is no need to hedge. So for us as a bank, we do not have FX exposures. FX transactions are done in Nigeria based on order-based. Order-based method means that you have a customer that either has money to sell or has a need to buy dollar. So the people that will then be taking the exposure when you go into FX transaction are the customers. So if there is a need to hedge, it is the customer that will need to hedge. Do we provide hedging products? Yes, we do. So where we have some of our customers that have exposures, we can help them to hedge the exposure in such a way that they're not too exposed, or they at least have an idea of what they are going into in terms of the total cost that they'll be taking on. The central bank has put in place a non-deliverable forward that can be used as an hedge instrument for some of the people that are doing L sales. So if you are doing exposure that is within 1 year, then central bank can give you NDF to protect your situation. For others, you can have other non-government hedge that is being delivered by maybe banks that are outside of the country, and you can also take that one.
In 2019, we think the current rate, which is in the NAFEX market about 360 to the dollar, is going to hold. And there's several reasons for that. But before I go into them, when we talk about a Naira devaluation, I don't think we're talking about a 10 or 15 or 20%. When the currency goes, it really goes, like it did in 2016, when it went essentially from 200 to 316, or when it went to 316 to 365 in 2017, for example. So these are very big moves that can happen. I don't think one of those moves is going to happen this year, for several reasons. First is that the Naira is not fundamentally very far away from fair value. Depending how you measure it, it's either 10% overvalued or 10% undervalued relative to fair values. There's no sort of fundamental pressure to move it. The next reason is that CBN has 42.9 billion of FX reserves with which to defend it. That's an awful lot of money, and you don't worry about where the CBN is until its reserves get down to around 30 billion. So there's plenty of money. The last reason I would give is that we have recently seen inflows of foreign portfolio investment, around over $1 billion in January, about 1.7 billion in February. So foreigners are showing confidence in our currency and our fixed income markets, and of course their money then props up the foreign exchange reserves of the CBN. So everything's looking pretty strong, at least until the end of the year.
We're a group,
Okay.
and from our group, from a treasury point of view, we are very strong in the FMDQ. But you will see that at the beginning of last year, Coronation Group led an activity with the NSE on derivatives and deepening knowledge in derivatives, because as the market starts to grow, we need to have good understanding of what we're doing. So from a securities point of view, yes, we are working with the NSE, and yes, we are going to look at alternative products. But we have securities, handles equities. They also trade fixed income securities. So we do all securities through our securities trading company. We also have our asset management company, which has its own funds. We have 3 funds now, and we're looking to bring in another 5 funds this year. We also have the trustees business. You also have to understand that all of these things support our advisory investment banking, and they help us in distribution, and they help us in deal structure. Well, we have an outlook. And you're right, we don't expect them to go up, but however, Guy will speak more to that.
Well, I mean, you're right to point out that rates have come down. So at the beginning of the year, we published a piece called 2019 Outlook, and that was in mid-January. And rates were then around, 1-year rates were about 17.5% at that time. That was the T-bill rate, around about that time. And we expected rates to come down. But we didn't expect rates to come down until Q3 or Q4 of this year. Now what's happened, and what you've correctly referred to, is that rates have really come down quite quickly. So we got the direction right, but it's happening faster than we think, or faster than we thought, I should say. And what's happened is that you've had a sudden increase in foreign investment into the country that I referred to earlier. That was consequent upon the Federal Reserve Bank in the US deciding not to follow a rate increase path in 2019, and that made the carry trade between dollar and naira that much more attractive, and that brought in a lot of funds. So rates are now, 1-year rates have come down to about 15%, which is a huge change from the beginning of the year. We are forming our view even as we speak, but I think the overall direction is down. I don't think we'll see as dramatic a change as we've seen in the last 2 months, and I still think the fundamental underpinnings of lower rates are there for cuts later in the year. You're right in saying that trade war is a very volatile narrative, and it changes from day to day. I think the bigger determinant is US inflation and where US rates go, and US inflation is very low. So I think the Fed's decision to, not quite a decision to hold rates, but largely not to raise rates this year is the most significant factor, and that's driven by US inflation.
For the group as a whole, I think for the economy as a whole, things slowed down last year as we approached the general election. But thank God the election has come and gone, and it's been relatively peaceful. I think things will stabilize now. And as Guy mentioned, we expect FX rates to be stable where they are. There will be inflow from foreign investors that will support what CBN is able to do. We expect oil price to be stable around where they are now, and that will help CBN to be able to at least maintain the rate where they are. We expect that as the economy pick up, our activities will also pick up. So reasonably, we think we're going to do better than what we did last year. We ordinarily do not give a projection of exactly where things will end, but based on our structure and the strategy that we have, new 5-year strategy, 2019-2023 strategy, we think we're going to get stronger, and our group will become even more of a leader in the financial service sector. You can never say never, but we've not started the plan to be listed on the stock exchange. I think pursuing a career in finance is a great idea. We have moved away from the past where you used to just say you want to be a banker. Nowadays, you have people that are specialists. Here on this desk alone, you have somebody specializing in research, a specialist in capital market. I have done risk management at different times. So people have to know the area they want to be a specialist in, and get the certification and the experience that will enable them progress well in that line.
Be curious, because finance changes very quickly. What made money a few years ago may not make money today. There may be new avenues opening up that look unlikely right now, and in a few years' time, you look at fintech, suddenly take off and make a lot of money. So stay curious and keep on learning.
The market, the finance market is changing. Financial technology is coming into the market, and there are a lot of opportunities, especially for the young guys and ladies out there who have a very curious mind, to come in and do a lot of not just industry changing things, but actually things that can change the value of people's lives. And that's what fintech is going to do. And so there are lots of opportunities for them to come in. We have a graduate trainee program, which we've run now for 2 years. And you'll be surprised the array of people we bring in and the array of opportunities they have. So it's not just from straight banking or straight finance. There are also opportunities in communication, there are opportunities with research, and so on and so forth.